So let's see. Next, my rant for the night is a theme of staying focused on your mission. And I saw everybody, I don't know if everybody even knows what was going on and heard it, but I'll kind of give you a brief update. It'll be really, really brief. It's not even worth your time, in my opinion, to focus on it. But I figured you'd be interested to hear my thoughts. And I knew we had a live call coming up, so I was like, I'll just wait to the live call instead of sitting on an email or recording a video. So what I want to do is talk about a lesson on shorting stocks. For those who don't know, this stock, as well as a few others, were in the news lately. This stock, previous to the beginning of the year, was trading at about $4, and then it ran up in price to $483. Right? The large reason that is because, well, the theory has it is that, and I'll explain this, I'll say it in Wall Street terms, and then I'll explain it in Travis's way I explain things, is that there's a lot of short interest on the stock, and then people started buying up the stock, and so it shot up in price. And the way short selling is, to get out of your position, you have to buy the stock, so that buying push it up even higher. And so what do I mean by that? Well, shorting stocks is like buying call options. It's like a naked call option. Not buying, excuse me. Shorting stocks is like selling a naked call option. It's just the stock version of that. So right now I'm going to pull up SPY, and there is something called naked call selling. Peter and I do not teach naked strategies. We do not believe in them. And I'll give you my blunt opinion on people who trade this. But I can sell this call option right here, this 382 call option. I can sell something I don't own, right? I'm going to bring in $265. If you know option basics, when markets go down, do call options increase in price or decrease in price? When stocks fall, do call options decrease or increase in price? Well, this call option will decrease in price if the stock falls. So I've sold it for $265. If SPY falls in price, right, I can come back in and buy this call option maybe for $1. Sold it for $265, bought it back for $1. I made a small profit of $1.65. All right. If you're not following me, let me know in the chat panel. But if you're following me, I'm going to move forward. Okay, so that's how short selling works, except it's for stocks, right? I would sell SPY. I don't own the shares. I'd have to borrow them from my broker. I will sell SPY for $381 in anticipation of SPY falling in price, maybe to $370. So sold it for $380 in the open market. If it fell in price, what I do is buy back the shares for $370, return the shares back to my broker, and I walk away with like a small $10 profit. Excuse me. Now, just let me show you something real quick. I forgot to show you. When I sell this, I bring in $265, but look at the max loss. It says infinite, right? Why does it say infinite? Because there's no cap to how far a stock can go up. So when you sell naked, there is, unlike a credit spread, if we sold an alternative strategy to make money, and to me, in my opinion, a smarter way to make money if a stock falls in price is to sell a bear call credit spread, right? I'm selling calls, but I'm buying one for protection. So let me do this. Let me do 6 contracts here. Same principle. It's a bear strategy. I'm selling 6 bear call credit spreads. I will bring in $174. Same amount of income I would have selling a naked call, but look at my max loss, 126. Because I bought some protection there, it caps how much I can lose, right? 174, but I can lose 126. That to me is a smarter way of making money if a stock falls versus, I should have sold like 12 contracts, but you get the point. Here I can make 200 unlimited loss. That doesn't seem smart to me. And that's the same thing with when you short sell stocks. If you sell that stock for 381 and it starts going up on you, it goes the opposite direction to 390. In order to get out that position, you have to go in and buy the stock back at a higher price. So you buying it back to cover your loss, in that case, you would have lost like $9, $10. So you have to cover your loss. You buying that stock pushes it higher. Oops, I'm on the wrong stock now. So that, along with a bunch of retail traders, is the story, the urban myth as to why GME ran up in price. Was that clear, Peter?
Yeah, and look at where the stock is at today. It closed at $90. It was up almost. It was almost to $500.
Yep, we'll get to that. Yeah, definitely. I have my thoughts on that. So that's a lesson on shorting stocks. Now, here's my blunt opinion. Unlimited risk strategies, which shorting stocks is, and selling naked anything, naked any option, they're dumb. Unlimited risk strategies are dumb and for people who don't care about getting or staying rich. And I had to put staying rich in there because I'm like, well, yeah, there are some hedge funds who are doing that. And you know what? I've been doing this a long time. I keep a little small list in my brain of all the companies that have gone bankrupt selling unlimited risk strategies. The most recent that I can think of is a company called optionsellers.com. They're not, the website is not there anymore. They were all on the news, like they were super popular. Oh, we have these PhD strategies. They went bankrupt. They lost all their clients' money because they were engaging in unlimited risk strategies. And something like what happened to GameStop happened to them, and they wound up losing all their money. So the question I have for you is, yes, sometimes it's tempting to make money with unlimited risk strategies, but if you want to get and stay rich, you have to ask yourself a question. So let's come back here and let me pull up SPY again. I just showed you how selling a naked call will bring in 236, but your loss is infinite. Means there's no cap to how much you can lose. Your losses will just keep accumulating until you either go bankrupt or you kind of stop the bleeding, right? Now, if you buy a call, look at the max profit, infinite. So which side of the equation is it better to be on? The unlimited profit side or the unlimited loss side? Think about that. If your goal is to get and stay wealthy, which side of the equation is it smarter to be on? Infinite profit or infinite loss? That's what I don't think people do when they get caught up in the distractions of GameStop and things like that. Now, my last point here is that I've said this before, I don't say it a lot, but Wall Street, aka institutional investors, they have more money than you and I combined because it's their buying, not ours, but their buying and selling is what moves the market. So in my opinion, I think it's naive for people to think that they can actually bully Wall Street, right? Yeah, all right, we can win, we can have a small win, like a bunch of, Reddit traders, and we stick it to Wall Street. We use, which I'm sure they did, they use most of their money to their name to buy GameStop, right? They run the price up. Yeah, we made Wall Street lose 50 million this month. Okay. As Peter pointed out, the stock just fell $60, 60% today. Do they have any more money to keep buying GameStop to make it go higher again? No, because most likely they already used all their money to the name. Wall Street has that much money. Wall Street can get loans and wait you out. But no, they probably don't have any more money to run it up. So it was fun while it lasted, but no, I'm not surprised that it's falling. I expect it to fall a little bit more after this. So my lesson to you is only play games you can win, right? Just, calm your emotions down. Now, with that preaching aside, let me tell you about the old Travis versus new Travis. So, so going back, Robbie made a good point. He said, when you sell, you have a liability, but if you buy, you have an asset. That's an excellent way to put it. Okay, so with that little message aside, would the old Travis have been one of the many trying to buy call options on GameStop? Yes, I would have. And I probably would have made a lot of money because back then I used to invest most of my account on schemes like this, is what I call it, a scheme. And yeah, I probably would have made millions like a few other people. But guess what? I would have lost a lot of money. Like I just literally right before the call, one of the biggest Reddit traders one of the I was thinking little because we're retail investors. We're little compared to Wall Street. He lost 13 million today alone, just today, right? So I, like him, would have been one of the many who lost money. And then I would have been convincing myself like he is. He's holding. He said, I'm just going to hold out for the long term, right? Because it's the right thing to do. So I've lost count of the number of times I have personally lost money due to noise like this. That's the old Travis. Now, I did some back testing just for fun. And I was like, I was hearing all these crazy numbers. So I told my wife, man, if we knew this would have happened, right? And we had bought just 10 grand worth of call options on GameStop and then sold it right at the high, $1.3 million. I was like, that is crazy. Just 10 grand would have turned into $1.3 million. Now, I admit that is what they would call sexy. It's tempting. You're like, Travis gave me a 10-year plan to be a millionaire. Screw that, right? I could do this in a few months with GameStop. The only difference is the 10-year plan I showed you via the 5-year retirement plan numbers. You have a high likelihood of accomplishing that. Not only will you accomplish the $1 million goal, but you're most likely to keep the million versus making $1 million with something like GameStop or Tesla. And I'll teach you why here towards the end. There's 2 key things people are missing out on when they get involved in situations like this. All right. So that's that's the old Travis. Sorry, I didn't teach you about the new Travis. Thankfully, going back to the old Travis. The reason I would have lost money, I have it here in my notes, is that the reason I wouldn't have cashed out my millions is because I would have never realized I was lucky, right? Because greed makes you dumb, literally. And I said this during the riots of last year. When emotions are high, intelligence is low. And if you're married, you know that truth applies to most areas of life, right? Especially marriage. When emotions are high, intelligence is low. So the new Travis, thankfully, I'm matured a bit, but I cannot lie to you. That's the current Travis. One of the hardest parts of my personal wealth building journey is staying focused and sticking to the proven and boring reality of getting rich, right? So now when I hear stories like GameStop, I treat it like the news. I largely ignore it. Right? I didn't spend a lot of time talking about it, with anybody else. Like, I've got better things to do with my time. I need to stay on mission because the reality is that the majority, not all, but the majority of the millionaires I studied, they didn't get rich through luck. They didn't scheme their way to millions. They saved their way to millions. And you know what? I kind of touched on this on the last weekly recap. I talked about, and I'm going to pull this up real quick because it's important to the point I'm making. I should have had this pulled up beforehand, but I want to pull up 3 books that made a huge difference to my life. And I don't even know if I've ever talked about these, but the first one I read was called The Millionaire Mind. I forgot who recommended it to me. I read this many, many years ago. The Millionaire Mind. And the second book in this series is called The Millionaire Next Door. I read several books by this author, Thomas J. Stanley. But this book and Everyday Millionaires, I just recently rented from my library or borrowed from my library. Everyday Millionaires is just a kind of updated current version of the older 2, but it's written by a different author. So the first 2 of the ones I read all 3, but the first 2 are the ones that were pivotal for me. This was literally the books that changed the course of my life because I used to get caught up in like GameStop, Tesla, chasing schemes. And then when I read this book, I realized that, wow, it mirrored and echoed what my millionaire mentor had told me. And I stopped, literally stopped chasing dreams. And I just buckled down and did what these millionaires did in this book. And that is literally when I started succeeding and what brought me new success. So that's where I'm at now. And so I ignore all the other distractions and I focus on the principles in those books. The next thing I do is, I was tempted like everybody to kind of jump in here and figure out a way to make money. But what I do now is sleep on that desire. I'll sleep on it for a day or two. And what I'm waiting for is my emotions to calm down. Once they're calm, I kind of logically think through things. I'm like, okay, how can I get in on this? But if I'm wrong, how can I still make money? I'll look at the tools I have, the strategies I have, and I'll try to think of it. Is there any strategy? What's the safest strategy I know that I can deploy on this? So that's kind of what I do now. All right, I've been talking a lot, so let me go ahead and move on. Give you a qualifier here in case you're tempted to get in on things like this. All right, so somebody right here, real quick, somebody put a 13,000% gain. Yes, what I was showing you earlier.
Just to kind of touch on that though,
yep.
Travis, I think one of the biggest issues, like you were talking about, because I've been following this whole GameStop thing because it was interesting, and I watched some videos and I read some of the Reddit stuff. And one of the guy that pretty much started this, he bought like $50,000 in call options back in 2019, and his call options were valued around 22 million, and he still had them. But one of the interesting things about when stuff like this happens, and I was talking to someone else about Bitcoin, and this is kind of the same point. Most people don't, because they don't ever have a plan, number one, they go into this, they get lucky, and they might see their account, oh my God, I'm up $1.3 million, but they don't get out because they don't have a plan. They don't know when to get out. So it's like you said, that greed gland. And then the next thing you know, that 1.3 million turns into, oh my God, it's a $10,000 loss. And that's usually when it, just drives people crazy. But it really stems towards everything you just said, where they don't have a plan. And especially with profit plans, we talk about it in the academy, how you guys, when you're developing your plan, you do want to have a profit plan, because you're going to get a call option that goes to 100%. And if you didn't have a profit plan, you're going to be like, what do I do? And you might regret it later on, so just wanted to throw that in there.
Yep, that is an excellent point. And Michael also made an excellent point in the comment. He said, when the story hits the news, it's the time to sell. He's right. The time I knew it was time to look for some puts is when my wife came to me. And y'all don't remember or heard the story. My wife is not a fan of investing. Like, she is so not into it. I've taught her how to sell cover calls, and she does that religiously or consistently, but nah, she is not into investing. So when she comes to me, I'm like, oh yeah, it's so like Bitcoin. I had cousins and things coming to me like, oh, what about Bitcoin and marijuana stocks? I'm like, oh, they're about to crash. Yep. When you have strangers asking you about stocks, that's when you know they're usually about to crash. And if you were, again, you slept on it, and you let your emotions calm down, and you looked at the option chain like I did, you would have saw where Wall Street's money was. Was it on the puts or was it on the calls? I'll let you go look at that and see what you can discover. Anyway, so here's a qualifier. This is my blunt opinion. If you're not already a millionaire, financially independent, or successful with our templates, then you should ignore noise like Tesla, GME, etc., right? Until you conquer the money game. It's sort of like a qualifier. Have I accomplished my mission already? We had this qualifier when we were getting out of debt. It was so frustrating. The moment we decided to get out of debt, our friends were going on cruises. They were going out all the time. They were like, hey, you want to come with us? We were like, yeah, we want to come, but no, we're committed. We're getting out of debt. And they're like, oh, we're going to be in debt forever. Why are you going to waste your money? Our qualifier was, hey, have we accomplished our mission? Nope. Then we stay focused. So that's what you have to ask yourself. Have you accomplished your mission already? And your mission is, but I assume it's you want to be one of those three: millionaire, financially independent, or successful with the templates we learned here. If not, then you have to learn to stay focused and ignore the distractions, because that's what it is. It's merely a distraction. Because as I said, I think I said on the recap, stocks don't make you rich, skill sets and habits do. And Peter talked about having a plan, and that ties into here. The reason I said most people would lose money on GameStop and Tesla. Tesla made a lot of people millionaires, and I'm happy for them. But I'm also sad for them because they're going to eventually lose that. And because like back in the day, I made a lot of money, but I kept losing it, right? And then I finally realized, some rich guy taught me. He was like, there's 3 skill sets to building wealth. You know, you notice it in lottery winners, actors. A lot of people focus on skill set number 1, making money, right? They focus on making millions with GameStop, Tesla, but they miss the other 2 skill sets, keeping it and growing it. And those books I just talked about earlier, those are the ones that changed my life, is because they taught me the other 2 skill sets I was weak in. I was so focused on making money, bet my entire account on call options and things like that. I never realized that, oh, it's actually 2 other skill sets I need: how to keep the money I make, and then how to grow it from there. So there's actually 3 skill sets you need to work on, but most people only focus on the first skill set. All right, last thing before I leave it, turn the floor over to Peter, is that